What's up, everyone? In this video, I want to talk about a trade that I took. Very simple analysis. I want to break down why I took it, where I entered, where I exited, and where my stop loss was, along with the reasoning for entering this trade. I'm always one to stress how the market is basically a storyteller, and us as traders to be successful is to use clues to understand the story while the market is telling it to us. And I'm going to show you some tricks and some tips, especially in this trade that I took, that really gave me more conviction and a solid confirmation to take this market long today because we absolutely rallied. I'm going to break down other equities like Apple, Amazon, Tesla, and then I'm going to get into some trades that we took in my Discord community because there was a lot of lessons to go over for today, June 24th. Before we get into it, I recommend everyone to follow me on Instagram. I'm going to post a link in the description below to follow it at Investortrade. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. The link will be in the description below, and you're seriously missing out if you're not following it. But now let's get right into the charts and the psychology behind the setups. So before the market opens up, I post pre-market plans in my Discord, setups I'm watching, levels I'm looking out for, and potential trading scenarios. The Discord is only available for Investortrade course members. I'm not posting these plans to show you how accurate they were. I'm just showing you this to understand the context so I could explain why I took this trade. So I pretty much, my bread and butter is the S&P 500. I love trading it. It's what I make the most amount of money on and what I have the most success with. It's very scalable, and in my opinion, it's the easiest market to trade because it's the most liquid market and it works extremely well with supply and demand zones. So whether we trade the future contracts or the option contracts for SPY, it was a simple plan today, and I was watching two levels, as you can see on the chart right here, 3838 supply and 3805 to 78 or 3789 demand, which was in this area right here. There's two scenarios that I'm watching. One is I expect 3838 supply to be tough resistance to get above. However, if we break this level with strong buying volume confirmed by the tape reading is extremely crucial, especially trading a liquid market like the S&P 500. I pretty much use the tape for 90% of my setups. It just puts the cherry on top. It's an added confirmation factor. I recommend learning how to read the tape. I said I'm open to playing longs if we could strongly break above 3838 supply, and I'm going to target the 3896 level, which is this line up here, as there was not much resistance or supply above this 3838 supply zone. In my last video on June 23rd, last Thursday, I talk about looking for structure in the market, and essentially this is what I mean. So 2 weeks ago on June 15th, the market had the FOMC meeting where we got a rally into that same 3838 supply zone that was in the pre-market plan from the 23rd or 24th. This supply zone was responsible for a very large sell-off in the market. So this is a key imbalance because we have tons of sellers now factored in at this price. What I mean by looking for structure is understanding where sellers or buyers are factored in at, using it as an important reference area. Supply and demand zones are our where component on the chart. And then us as traders have to comprehend that and understand when to enter or maybe when not to enter the trade. So now we have sellers factored in from 2 weeks ago at 3838 supply. Looking for structure in the market. We've been seeing dips have been getting bought up despite falling very aggressively, where buyers have been defending moves to the downside, creating demand on the way up. I mean, as you can see, new zones have been forming as we've been moving up, and dips keep getting bought into the demand, especially the day prior on June 23rd. Now the market overnight was moving up going into Friday. We created demand in this area right here, and then I sent out the plan of exactly what I was watching for either a dip to get bought, or if we wanted to be bullish, we wanted to see the market reject or print very large aggressive size on the time and sales in level 2. The tape confirms a lot of my setups. So as the market opened up, I'm going to go to a 1-minute chart. I do not have any screenshots of the time and sales in level 2. I can only show you what I saw on Bookmap. And what this is going to show you is a historical heat map and prints of the time and sales. And you could see the chart over here to the right is as the market starts coming up, every green bubble indicates aggressive market buy orders coming into the market. If you are playing a breakout, whether you're trading the S&P 500, whether you're trading Apple, Amazon, Tesla, you want to see aggressive market buy orders above your level or inside your level, or demand getting created on the way up, because as the market moves up, you want to see more buyers sustain value and agree with price moving higher. You don't want to see any rejection. So as the market moves up here on Bookmap, think of every green bubble as an aggressive market buy order, or just orders that hit the offer. So as the market's moving up inside of this 3838 supply zone, we start seeing very aggressive market buy orders, continuously putting pressure on bears. Then the market dips. We hold 3838, as you can see in this dip right here. And then what this chart looks like is this leg up. Look at the buying volume that comes in. And then this is what we see right here. Now, where I entered this trade, I posted my whole fills in the Discord. I entered at 9:32 when the market looked like, or 9:34 when the market looked like this. Now, I entered around 3844. I put risk on the table. Did I know this trade was going to work out? Absolutely not. I never know a setup is going to work out before I enter. I just know that odds are in my favor because my edge is present and I'm getting multiple layers of confirmation that give this trade more conviction. So I want to make that very clear. This goes for everybody, even the guys I know on Wall Street. Before they enter a setup or a trade, they don't know if they're going to be wrong or right. But what they do is they make sure they're trading when they know their setup or their edge is present, and they're managing their risk that if they do lose, it's not going to hurt them, so they can live to fight another trade, because that next trade could be another winner. So now I'm long. My stop loss is the low. So I got in around 3844 and I'm risking about 3831. It's about a 14-point risk. And my target was the 3896 area. I think that's a 14-point risk to make about 50 points. That's what a 4-to-1 risk to reward. So very good risk to reward. These are the type of setups I look to aim for, especially when I have higher confirmation and higher probability of the setup working out. So now I'm in long, then the market immediately dips. No reason to freak out. Stop loss never triggers. And everything now is starting to lean towards the bull side. More aggressive buy orders are coming in on the time and sales. And also, we have very strong market leading equities. If I did not see aggressive prints coming through on the time and sales, and I did not see market leading equities rally, I make this very clear. I would not have entered this trade inside of supply on the S&P 500. I would have not gotten long. Why would not have gotten long? Was because if I go to a higher time frame chart, this 3838 supply zone was responsible for a very sharp market sell-off. Obviously, sellers are factored into the market at supply. So now, 2 weeks later, when the market tests this supply again, I have to go in the market expecting that same reaction, because this is an area that sellers were once responsive and rejected the market. So unless we get a different reaction, we're not going to get, or if we get a different reaction, we're going to get a different result. However, if we get the same reaction, the market comes inside of supply and we start selling off, then I'm absolutely not looking to take the market long inside of supply. It just goes against one of my rules. However, with what I've explained so far, this is my exception for getting long inside of supply, because everything was leaning more towards the bull side. So let me maximize this again. Aggressive prints came through, and this put the cherry on top was market leading equities. So I want to go over the pre-market plans on Amazon. This was a top watch today, and it's crazy the power of supply and demand. If these plans are not posted after the market opens up, these plans are posted prior to the market trading and prior to the market testing these levels. Amazon had demand at 111.44, and we did not have much supply or resistance, so this could get moving above 114. I'm using this to support a strong ES and NQ thesis. Again, these market leading equities just gave me extra confirmation. It's all about putting as many pieces to the puzzle together. The more you have, the higher conviction you're going to have in the setup. And the last recap video, I mean, these setups are identical. If you've seen that last video and you put what I said in there into action, I mean, these trades were A plus, very easy setups. So Amazon pulled back, and look at the low a day. Low a day is 111.43. It hit it to the exact penny and started rallying after the first 2 minutes. I saw that, remember, the pre-market plan on Amazon, and I also saw Apple trying to get above 140 to fill the gap to the upside. So now we had Apple over here to the left, very strong. This was moving up above 140. It actually acted as support as we pulled back into it. And then we had another name like Tesla, extremely strong in the first 15 minutes with very strong buying volume, as you can see down here, and very strong green expansion candles to the upside. So market leading equities were strong. The S&P 500 on the tape was very aggressive market buy orders. We were creating demand on the way up, and now we're starting to see buyers inside of this supply zone where once 2 weeks ago we saw heavy aggressive sellers. So not one thing that I just mentioned right there was leaning towards the bear side. If the market maybe hit supply and, equities were weak, failing to hold demand, maybe the NASDAQ was selling off and there was maybe some heavy offers coming in on the S&P 500, then yeah, I would not have taken this trade to the long side. But I love to see consolidation inside of supply, and I love to see everything that I mentioned. So now I'm in the setup. The market starts moving higher, and just a clean break. We start consolidating above supply. 10 o'clock hits. I think the consumer index came out, or the consumer sentiment, and we got strong buying volume, nice reaction out of that. And I got out 90% of my position at 3878 right here around 10:04. Just because, I'm going to go to a 5-minute chart now, other than the target at 3896 up here, we had a little bit of a resistance point from the, where was it? From the open of the market gap down about 3 weeks ago on June 12th. So this was around 3878. This is the only other resistance point that I had. And I knew once we got above this, that target is going to hit at 3,900, 3896. So I got out a little prematurely. I followed my plan, and it was a very stress-free trade. Following tape and reading what the market gives me, it is extremely key. And I know a bunch of members absolutely destroyed this trade. We killed it today. We killed it this week. The power of price and volume analysis, supply and demand zones, should not go unnoticed. If you can get your where component on the chart and then master the when to enter and why to enter, you have a serious edge and a serious strategy. And it's a skill that's going to really last you any market, any style, any instrument. I'm always one to stress about focusing on the process. This member took a hit, had it at $400 account, took some time to get proper trading routines such as journaling, reading about psychology, and focusing on his setups and his account growing to $2,000. This is what I mean by following the process. This member had very beginner luck trades. It happened to me. We've all made money when we first started. We felt like it was easy and our ego got in the way. We wanted to make more and we thought we were great traders until we got smacked in the head and realized how difficult this was. Joined several communities. None really teaches an edge. The mental part with Investitrade and why we teach emotions and trading without them is really what will help bring success. $1,800 profit. Another member watching the course, screen time and experience, following the process. The market catches up. $300 account into $3,000. Again, this is not to brag about anything. This is just to show you what happens when you have an edge, when you have a plan, and when you follow a proper process and scale that up. If you follow signals and you're in a signals group chat, you may make money in the short term. And I know I'm going to get a bunch of heat for this, but I do not believe in signals because yes, you can make money now in this one trade or, 2 trades. But if you're in this for the long run, there is no sustainability in following signals. Learn the skill, learn your process, and scale that up because that's what's going to last you a lifetime. Consistency like this on this calendar right here comes when you follow the process. This member just joined the group yesterday and already made $1,700 watching the videos and understanding the strategies. Another member joined the group this week. $600 account, made $1,800 profit. Start small, scale your profits up. Forget these profits. Just understand that if you follow the process that I explain in all my videos, the money like this is possible, and it will come if you dedicate yourself to it and you put hard work in and you work smarter. 10,000 in 2 days, trading using supply and demand with price and volume. Very, very key. Another member, $71,000 profit. And I'm going to leave you all off on this one. Nothing but good things to say about the group and the course. Past 8 weeks have been profitable. 6 of 8. He used to chase everything, and now he looks for one setup and everything else is noise. The mental shift was always the missing piece. Emotions and follow your edge. Once you could do that, trading becomes so much easier. I'm going to end the video on that note. Drop a like, comment if you have any questions, and definitely check out the links in the description below. I offer a very in-depth and educational course. It will come with access to the Discord at no extra charge. Peace out.